The MSCI Emerging Markets Index, it's up this year, around 5%, but it's still below those 2007 highs. At what point will it surpass that level, do you think?
I think it'll probably surpass this year. I think we're going to see a pretty good market this year for a number of reasons. One, currencies in emerging markets getting stronger against the U.S. dollar. And a lot of people, although I don't go along with this theory, a lot of people say, well, if commodities go up, emerging markets do well. And commodities are getting stronger. I mean, there's no question about that. So combination of these things makes emerging markets look pretty good now.
But you touched on the currencies there. Many would say that the stronger currencies, the rallies that we've seen, whether it's the Thai baht, for example, that poses a pressure. At what point do these levels start to become a problem, given the US dollar strength?
Yeah, I think we're going to probably see another, let's just say, 10% weakening against the US dollar, with US dollar weakening against the currencies. But this is not going to have a big impact on many of these countries, because what we're seeing is a resurgence of tremendous domestic consumption. And if you talk about exports, a lot of the exports, particularly from China, are high-tech now. Price is not the only factor anymore. So this is, the currency impact is not going to have a big negative impact on exports and on tourism either, because people will be still visiting Thailand. Thailand is reaching higher and higher numbers.
The story across emerging market stocks, it's for the better part of the last 10 years or so, it's really underperformed when you compare the two.
Exactly.
So, I mean, if you have to be invested, you almost have no choice but to be invested in EMs. The thing is, though, with rising rates ahead, how do you hedge? I mean, how do you still stay long but also protect to the downside? Because those two things, higher yields and EMs, don't necessarily coexist quite well.
I think you ought to look very, very carefully at the earnings momentum of these companies. If the earnings momentum keeps up ahead of the interest rates, then we're safe. If it doesn't, then we've got to watch out. And I think if you look down the list of emerging market leading companies, particularly in the internet space, there's still a lot of growth there, a lot of room for growth. But more importantly, in my view, and the reason why I talk about commodities is that I believe the commodities-oriented companies are going to do probably even better than the high-tech companies, because with the resurgence of commodity prices, they will do much better, and they've been undervalued for so long.
Based on your experience, and you've followed these emerging markets for a fairly long time, I mean, at some point, higher oil starts to hurt some of these markets. There will be dispersion. Oil at 70, maybe not yet. At what level do you see this being counterproductive, the rise in the oil price?
If it rises probably above $100, which, by the way, is not going to be surprising to me.
Why not?
It's quite possible. Simply because the
oil at 100.
At 100. Simply because the U.S. dollar weakening means that you've got to use more dollars to buy a barrel of oil. And a lot of people think that oil consumption is going down. It's not. If you look at the imports by China in quantity is going up. Price may be going down. The value of imports is going down, but the quantities are going up. So I believe that there's quite possible a much higher oil price.
Yeah, China's now the largest importer of oil, overtaking the US, I just think, towards the end of last year.
Right.
Some of your top picks regionally, Thailand, Brazil, China, India, Vietnam. Can you tell us why, and maybe break down particular sectors as well in some of those countries that you see the most opportunities?
Of course, the most opportunity I see right now would be in the commodity area. So you've got to look at some countries in Africa.
This is on a 12-month kind of time frame.
Yeah, within the next 12 months. You've got to look at Brazil. You've got to look at some of the Latin American countries that have high commodity components in their economies. And the other area would be the consumer area, because you're getting this resurgence of consumer spending, which is really hitting many of these markets. Vietnam would be a good example. We've been making private equity investments in consumer-oriented companies there. In Turkey, for example, we have an incredible, successful company.
Is that the way to play Vietnam, you feel? Because the public markets in Vietnam had a stellar 2017. We were up 45%. And, I mean, one would imagine that's just the start of this transition from being a frontier to an emerging market. But what's the 2018 play? Is it in the private markets, in PE, for example?
It's in PE and private market, but more importantly, it's going to be in privatization of state-owned enterprises. If the government really moves ahead, which I think they will, you're going to see more state-owned companies being privatized. And some of these companies can do very, very well once they're privatized. If you look at the Vietnam Milk company, they've done incredibly well under terrific management, even though it's still state-owned majority.
A lot of people have misread the push to reform the SOE sector in China. A lot of outside investors have thought, OK, they're going to push through reforms. That means they're going to start spinning off parts of the SOEs. I'm sure you didn't fall into that category, but it's not going to happen in China, is it? We're looking at a very different picture.
Well, an interesting thing is with China, we've actually seen an incredible improvement in governance. I mean, I remember sitting down with one of the big...
In the state sector?
In the state sector, sitting down with the chairman and the board of directors of a state-owned company, and first thing he said, I want to apologize for you for our poor performance. I mean, 10 years ago, you never would have heard that. So the attitude is changing a lot in China. Now, of course, anybody who wants reform is going to have to really work at it. It's going to take time because you've got this bureaucracy. But they are really moving ahead on that.
And the role of the party, which came out this week saying the state-owned enterprises have to generate profits this year.
Find a way.
Yeah.
Exactly.
Did you find it funny?
No.
That they were ordered to be profitable?
This has really been going on for, let's say, about 3 or 4 years now. They've been pushing these companies to reform. And, of course, in order to get the profitability, they have to free them up. They have to get rid of a lot of the bureaucracy and so forth. And you're going to see more mergers, acquisitions within the state sector. It's going to be very interesting.
There's this constant debate, and this debate has gone on for several years now when you look at China. It's that, you can't bet against the Chinese consumer, but perhaps a spammer in the works could be the debt story and how that drags in that. I mean, you'd probably win the argument and say the Chinese consumer wins that. But at what point would you say the debt issue is starting to drag on this sort of middle class, longing the Chinese middle class?
It's already hitting some areas. You're seeing some really bad debt situations, particularly in individuals getting up to their neck in debt because they haven't had the experience. And they don't know the concept of compounding interest and what impact it has. So you're beginning to see that. The interesting thing is the government is recognizing it now. And they're saying now, we've got to look at this very carefully, not only in the government and the state sector, but or the private companies, but we've also got to look at the consumers. So they're beginning to look at this very, very carefully. And as you know, some of the internet lending, they're cracking down on that because they've gone too far. But you must remember, overall, the Chinese consumer is not as much in debt as the U.S. consumer. They've got a long way.
And they won't be for some time, will they? But more broadly, could the consumer, maybe the Chinese consumer might be hit in this as well. These tensions now that are ratcheting up between the US and China, they ebb and flow, of course, but we have had this action now from Washington. How much should we read into it? How concerned should we be? Is it a blip? Is it politicizing the issue in Washington? Is it a cheap political shot, or is this a more concerted effort now by the US?
Of course, you must remember China is not the only target. I mean, Mexico, almost every country in the world is being targeted by the Trump administration on trade. So I don't think China is going to necessarily be singled out. And let's face it, the U.S. and China are joined at the hip in terms of trade. I mean, there's a two-way traffic. A lot of farmers in America depend on China export to China on agricultural products.
But does Trump understand that, the complexity of the trade relationship?
He will definitely get the message when the Congress comes after him and says, look, my constituents have to export to China. So you're going to see that.
And how would you rate, or how would you describe, say, how Xi Jinping has and Beijing has essentially taken to Donald Trump's presidency? Do you think they've taken, I don't want to say higher road, but do you think they've managed to avoid potential confrontation on a lot of these potential disruptive fronts?
I think they've been very, very clever. They've appealed to his ego in a very clever way. And they've been very, very good in not confronting, Now, he may want to confront, but they have not reacted. They moved sideways. And I think it's been very, very good the way they've done that. And it'll be, going forward, I think you can see more sort of give and take and sort of behind-the-scenes maneuvering. But the real interesting thing about China is the One Belt, One Road program, because that brings China out, You begin to focus not only on China, but on what they're doing outside. And that's really very interesting.
When we talk about emerging markets, we necessarily talk about geopolitical risk, and you've weathered your fair amount of that over the last 3 decades. Is the Trump administration, is the US now the geopolitical risk that has to be factored in?
Oh, definitely. They're creating risks, geopolitical risks, because they're confronting countries now in various issues. Now, I'm not saying they're wrong in confronting. There was about time, for example, they look at the situation in the Middle East and Pakistan and so forth and so on. So they're beginning to ask tough questions, which I think is going to be good for everyone at the end of the day. But it does raise the political temperature. There's no question about that.
How long, just generally speaking, this is just a theoretical question, obviously the past 30 years has seen just massive amounts of growth and wealth creation in China. Do they become a developed economy in the next 30, or is this a longer road ahead?
No, I'm talking maybe 20 years. They will be
shorter.
On a per capita income, they will be moving up very, very quickly at the rate they're going now. And I think the way the party is operating in China is very, very clever. They're doing the right things. So I'm sure they'll achieve that.
Just looping back to some of your legacy around the EM space, it has changed phenomenally in the 30 years that you've been involved. When you first got involved, there was no internet, you couldn't use your mobile phone. Yeah. I have no idea how you did what you managed to do. Describe some of the major changes that you've witnessed over the 30 years, some of the key points, key highlights, and what you've learned from those changes.
It's incredible. We used to use the telex. Remember the telex? Feeding the paper tape. That was it. No internet, no fax at the beginning. You didn't have faxes even. So the changes have been tremendous. But the real important change has been the political change. They've moved from socialist, dictator governments to a market economy model. And that is the most incredible change that we've seen globally in every continent, in almost every country. And the process is still continuing. You must remember that there are many countries in Eastern Europe that are still getting used to the idea that they're not communists anymore. They have to be market-oriented. So this is really the change that we're beginning to also see accelerating in many of these countries because of the internet.
So you're retiring next week. Give us some key takeaways here. If I gave you $100 and I gave you absolute freedom to invest that money anywhere in the world across any asset class, what is the Mark Mobius allocation? Say I had a 10-year time horizon.
Well, I'm not retiring. I'm still going to continue to invest anyway. But what I would do is, and what I'm doing is, first of all, keep about 20% in cash because the markets are high. You may want to take advantage of a downturn. And then put about half of the rest in emerging markets, generally, globally, and the other half in commodity-oriented companies.
And your advice, one line of advice for a new up-and-coming fund manager looking to the EM space, what would it be?
Get out and research, talk to people, do as much research as you can on the streets. Just don't sit in front of a screen. The Bloomberg screen is terrific. You get great leads, but then you got to get out and follow up on what the Bloomberg is giving you so that you can get some real understanding of what people are doing and how they're living.
And of course, not all emerging markets are created equal, as they say.
Sure.